Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we are going to talk about how to maximize business credit card approvals. So whether you're a startup or existing business and you're going to apply for a business credit card, this is the video for you. We're going to share with you how to maximize the amount of credit that's issued to your business, what the card issuers actually look for. We're going to share with you how to get the best terms and rates and offers issued to your company. So let's get started with the next slide here on some of these cards here that you're going to see. These are really popular business credit cards that you see in the marketplace. And these particular cards, they require a personal credit check. So many bank card issuers that issue credit cards to businesses like yours, whether you're a startup or existing business, if you're doing less than $1 million in revenue, you're considered a small business. And as a small business, you're deemed kind of a credit risk. Most small businesses doing under $1 million in revenue, they want to minimize risk. So what do? They require you as the owner a personal credit check. They want to look at how credit worthy you are as an individual. So these particular cards, while they do require a personal credit check, they report to the business credit reporting agencies. With the Spark card here with Capital One, they report your payment activity both to your personal credit as well as to your business credit. So if you're looking to get a business credit card, just be aware of some of these mainstream credit cards that you see all over the advertisements. You see them on many websites. The majority of them require a personal credit check. Okay, now what I want to share with you here is some other credit cards issued by these mainstream card issuers that don't require a personal credit check and that don't require a personal guarantees, because you're going to hear that a lot about personal credit checks, personal guarantees. How do I get cards that don't require a personal credit check? How do I get cards that only look at my business credit reports, etc.? So I kind of want to get very upfront with you on this, on what's available in the marketplace, so you can know what they look for and how you could be prepared, because personal credit check just opens you up to many opportunities. Okay, so the majority of all these mainstream card issuers like Chase, Capital One, American Express, US Bank, Bank of America, Citi, they're going to require a personal credit check if you're a small business doing under $1 million in revenue. But Capital One also has cards that for businesses that are much less risk. They look at if you're doing more revenue as a business, then they don't require a personal credit check or a personal guarantee. So this Capital One corporate card, in order to get this card, there's no personal credit check, no personal guarantee, but you have to be doing you have to be spending over $1 million a year in expenses using this card. So that's a big difference. Obviously, if you're spending that much as a business, you're not a small business, right? The American Express corporate card, this is another credit card issued by American Express, but no personal credit check on this card, no personal guarantee, but you have to be doing $4 million a year in revenue. Okay, so you're probably wondering, well, I'm just a startup, or I'm just a small business, okay, and I'm only doing $50,000 a year in revenue. I'm only doing $100,000 a year in revenue. So remember, that's a small business. So in the eyes of bank card issuers, they look at you as a risky business, especially if you're under 2 years old. Then you're very high risk. Once you pass that 2-year threshold as a business, your risk now diminishes a little bit, okay? But remember, revenues are another big part of the risk assessment that bank card issuers look at. The beauty of credit cards, though, for businesses is their stated income. So they don't necessarily require you to provide financials or tax returns or bank statements, okay? So they look at not only personal credit, they may look at revenues of, like, as far as bank data. So let's talk about some of these new credit cards that are hitting the marketplace that you'll hear a lot about because they don't require a personal credit check. They don't require a personal guarantee. And you as a small business, if you're not doing millions in revenue, you can get these cards. So first, there's the Ramp card, okay? This particular card, they'll issue it to you, no personal credit check, no personal guarantee, but they require you to have $75,000 in cash in your business checking account, okay? So you see what they're doing is they're minimizing risk. So if you have $75,000 in liquid cash in your business checking account, that offsets their risk to you. So they're not going to conduct a personal credit check. They're not going to require even a personal guarantee. But their terms are, when you use this particular card, guess what? You have to reconcile at the end of the month. So anything you spend on this card has to be paid back at the end of the month, at the end of the billing cycle. So this is not a revolving card, but it's put out there. It is a business credit card, but it's not revolving like all these other cards you see up here. They allow you to carry a balance. You can pay a minimum payment. You can carry debt on these cards, and that's the difference. Although this is a business credit card, it doesn't require a PG, personal credit check, but you have to have that $75,000 in cash in your bank account, and you can only you have to pay your balance in full at the end of 30 days. Then you hear a lot about the Brex card. This is another business credit card that you hear a lot about because it's no personal credit check, no personal guarantee, right? But they have two unique opportunities with this particular business credit cards. You have to have $50,000 in cash in your business checking account in order to get extended the same terms as the ramp card, which basically means is whatever you charge on this card, at the end of the month, they take it out of your business checking account, okay? So you have to reconcile at the end of 30 days. If you don't have $50,000 in your business checking account, they also have the option where you can get this card with no personal credit check, no personal guarantee, but the way it works is when you spend money at the end of the business day, you pay it back. So that's the same day when you use it, it's paid back. Okay, so you can see, although these are touted as no personal credit check, no personal guarantee, their terms are much different than your revolving business credit cards like your Spark or US Bank, etc. And then you have a real popular card. I've done videos on this particular one, Divvy, is they do pull a DMB report on your business, and they don't do a personal credit check if your Dun & Bradstreet credit file is very strong. And they also determine your credit limit based on not only credit limit and recommendation that's in your DMB report, but also on your monthly expenditures. What do you spend a month? So they want to look at your revenues of your business as well. Okay, but that's what's unique about this. Let's say you don't have a well-established business, or your DMB Dun & Bradstreet report is not strong enough. Then they give you options. They may you have the option of allowing them to do a personal credit check to qualify for this card, or you could even PG this card. They even have an option where they have a prepaid business credit card, which I did a video on that, which you can watch right here. So with this particular card, though, it's the same terms. You use it at the end of the month. Anything you spent on the card is taken out of your business checking account, so it's reconciled at the end of the month. So you'll see there's a pattern here that if you're a small business doing under $1 million in revenue, you can have very strong business credit reports, and there's lots of cards on this last tier here that you can get, but it's not the same as revolving credit. But there are exceptions, and I'll get to that in a minute. Then you have a Capital on Tap card. This is another business credit card that I talked about, where they do a soft pull. They check your personal credit, but it's a soft pull, not a hard pull. And they also pull your Experian business report. So they want to see that you have at least a decent Experian report. And this is the same type of card as far as they give you a 30-day, you have to pay it in full. So these are great cards at this very bottom here. These are credit cards you can get for your business that allows you to use it for day-to-day expenses, but just remember, you have to pay it in full at the end of the month. Okay, so we've done videos on this, and I want to kind of give you an idea from as a business owner. You kind of have to determine what type of credit do you actually need. Do you need cash credit that just for day-to-day expenses? You want to build your business credit, and you want to minimize risk. You don't want to use your personal credit. Then these particular cards here, these alternative business credit cards is what I like to call them, are great. They're excellent, and I think your Divvy is the easiest one to get because they don't require lots of cash in the bank. Like the ramp requires $75K, Brex $50K. So I love the Divvy card. Okay, but let's say you're a business owner who wants more than that. You want to have revolving options. So if you use the card, you want to be able to draw your money out, and you want to be able to carry a balance and have those options. Then you're going to want to look at some more of the small business credit cards that do require a personal credit check and a personal guarantee. So I want to talk about underwriting because this is very important. In this particular video, we're going to talk about the business credit cards, how to maximize your credit limit approvals with card issuers that pull your personal credit and that require a PG, a personal guarantor. So that, and that's the majority of business credit cards in the marketplace. I hate to say it, 99% of small business credit cards, small business doing under $1 million in revenue, they will require a personal credit check. Okay. Now they also do business credit checks, so that's why we really encourage you to build up your business credit reports, because when you have a DUNS number and you have an established Experian report, or you have a DMB report, etc., and the card issuer also pulls that when they're doing their risk assessment, that makes a big difference in the size of the credit approvals you're going to receive, and it also minimizes risk because it shows a card issuer that you have established business credit. Okay. Revenue requirements. There are many cards that have revenue requirements. We're not going to really talk about those in this particular video. Time in business, that is a risk factor that does play a role when you're applying for a business credit card. So if you're only 6 months in business, you're deemed very high risk compared to a business that's 5 years in business. Okay, so 2 years or more is the threshold we'd like to see. So just keep that in mind. But for this video, we're going to talk about the two main things, which is the personal credit check and the personal guarantee, which is the majority of business credit cards that are available in the marketplace as well. So what do you need when you apply for a business credit card? This is just basic stuff. You're going to need your company name, your business address. You want to have your years in business, and you also going to have your annual revenue. Now keep in mind, I know we're talking about years in business. You may only be 6 months in business, but your time in business, basically. You're going to need your EIN number on the application. Some business credit card applications ask for your industry focus, what's your industry, or they may ask for your NAICS code, and that's your industry classification code. So you could Google NAICS. You want to make sure that whatever code that you select, that's the code you're going to use on all credit applications, especially when applying for your DUNS number. Estimated monthly expenses to use on the card, and your individual application information, your position in the company. So these are things you're going to need. And if you have a DUNS number, supply that on the application. Even if it doesn't ask you for it, just put it on there. DUNS number is this. Okay, so that way you can let them know you are your business is listed in Dun & Bradstreet and you have a credit file. Okay, so let's talk about credit reporting with business credit cards. And it's important for you to know the different types of cards in the marketplace. There are business credit cards that report only to your personal credit. So even though they're classified as a business credit card, they only report your personal credit. So it doesn't help you build business credit. And any debt you carry on that business credit card impacts your personal credit utilization. It impacts your personal credit scores, etc. So those, my recommendation is to stay away from those type of cards, because obviously that doesn't benefit your business as far as building business credit, and it's impacting you individually. Okay, so your goal as a startup or an existing business is to create a clear separation as much as possible. Okay, and of course in this video there are exceptions. There are credit cards where they may require a personal credit check and a personal guarantee, but the card itself doesn't report to your personal credit. And those are the kind of cards that we're talking about in this particular video, the ones that you want to shoot for. We're talking about business credit cards that report only to the business credit reporting agencies. Yes, they may require a personal credit check to do an assessment. Yes, they may even require a personal guarantee, but it doesn't show up. The activity, the card itself, and debt you carry on the card doesn't show up on your personal credit. That's great, because then there's that separation between your personal credit report and your business credit report. There are also cards that report both to consumer and business credit agencies, like the Capital One Spark card. That reports to all your personal credit reports, and it reports to multiple business credit agencies. So now, what I don't like about Capital One is they're known to pull all 3 credit files when you apply for credit. Okay, they're known to pull your TransUnion, Experian, and Equifax, an inquiry on all 3 when you apply. Okay, so that's one thing I don't really like, that they do that, where there's many card issuers that only pull from one bureau when they're doing their underwriting. And there's actually business credit cards that are non-reporting, that are basically off the grid. They don't report to your personal credit, and they don't report to business credit either. Okay, so that's just so you understand that that there's a clear difference and it's ultimately up to the card issuer who they're going to share your payment data with. Okay, so is this you? The purpose of this video is for you. If you have good personal credit, And just so you know, if you have bad personal credit, at the end of this video, we have a solution for you to get a prepaid business credit card that help you build business credit, even if you have bad personal credit. So, but if you have good personal credit, I have great news for you, because we're going to share with you how to leverage that. Okay, leverage is very, very powerful in helping you build business credit much faster. Okay, I want to leverage it to build my business credit fast. Okay, so if you have good personal credit and you want to put that to use, which I think is a great strategy. Okay, why would you not want to leverage what you've successfully built to help speed up the process of building your company's credit? Okay, that your good personal credit is an asset. Okay, it helps you get great terms in your personal life, so leverage that to your business. It'll help leverage your business and give your business a jump start. Okay, I want access to cash credit for my business. So if you have good personal credit, you want to build business credit, and you want to have access to cash credit right away, then, and I don't want to supply financials, tax returns, and bank statements. I want no docs. Okay, then this is the video for you. Okay, now keep in mind, there's plenty of ways for you to get business credit. Don't get me wrong. Vendor credit's great. Retail credit's great. Getting credit to use for gas in your card, that's great. But if you need flexibility, you need cash. You need a cash injection. You want that flexibility to be able to use it whenever you need it for any expense for the business, then that you're going to need cash credit, which are business credit cards. Okay, so if this is you, let's keep going. Okay, so let's first talk about the personal guarantee. Okay, you hear this a lot. I don't want a personal guarantee because I don't want it to impact my personal credit. What I do want you to realize what a personal guarantee is. In a nutshell, it's a written promise for you as a business owner that if my business can't pay, I'm going to pay. But the biggest misunderstanding with business owners is they think that a PG means that it's going to report to the personal credit. It has nothing to do with your personal credit. It has to do with the guarantee. Okay, so let me just put things in a bank's perspective, a bank card issuer. When you, as a business owner, are willing to provide a personal guarantee, it's letting the bank know that I will make good on this if my business doesn't pay. So that minimizes the risk to the bank. So that allows them to say, okay, the business owner, is backing up the company. Especially if it's a startup with no track record, no revenues, you have to supply a personal guarantee. Okay? But if the business is established and doing millions of dollars of revenue, you don't need to supply a PG because the business is strong enough. It's on its own. Okay, but until you're doing those millions of dollars or $1 million plus, be prepared to supply a PG. Now, where does this affect your personal credit? In the event that your business defaults, and it defaults on, let's say, a credit card, and it doesn't pay, then the bank card issuer will come to you as the personal guarantor and says, your bank defaulted, you need to pay this. Okay? So at that point, you pay it. It won't impact you negatively because you made good. You backed up the business's debt. If you say, you know what, I'm not going to pay that. Even though I personally guaranteed it, I'm not paying it. Guess what? Then the bank will go after you because you PG'd on behalf of your business. So ultimately, most people are so worried about the BG, just so you know, don't spend more on your financial obligations than you know that the business can afford or you can personally afford. Okay? So when you personal guarantee a business credit card, okay, just use it for small expenses for the business if you're so worried about a BG. But don't avoid it if it's going to help take you to a next level. I'm going to share with you why it's so important, why when you do supply this PG or personal credit check, you're going to get options for much more credit that'll help further build your business credit reports and give you access to much more opportunities than if you went the latter. If you started out as a startup business, say, I'm not supplying a personal credit check, I'm not supplying a PG, I'm just going to start out building with vendors and that's it. It's going to take a much longer road, and you have to have the revenues to support it as well. Okay, so let's talk about 99% of small business credit cards in the marketplace require a PG. And that's if you're doing under $1 million in revenue. That's a fact. Okay, now there are exceptions to this. So before I get beat up on this, I'm going to share with you these exceptions. Okay, first, if you have a well-established business credit reports, there are co-branded credit cards like your gas cards and fleet cards that carry the Visa MasterCard logo. These aren't mainstream credit cards like your Cap Ones or Bank of America, etc. But these are co-branded, which means it's a gas card that you can use anywhere because it has the Visa MasterCard logo. Okay, and the way you got that with no PG and no personal credit check is because you had a very well-established business credit report. So that's why you see when people talk about no PG business credit cards, it's not necessarily mainstream cards. It could be a gas card, etc. That's co-branded. Okay, but in order to get those types of cards, I go by the 10-10 rule. That's 10 trade lines reporting on your business credit report with the agency that gas card issuer pulls. Number two, $10,000 credit limit you want to have, at least 1 to 2 reporting on your business credit file. And number three, 10 months of payment history. Okay, so that's 10-10-10. That's minimum, okay, before you can expect to get those types of cards. And they're not going to be huge credit limits, okay? Age of business plays another big important factor, and revenues of the business. Corporate credit cards do not require a personal guarantee. And I talked about that earlier. If you're doing $1 million or $2 or $3 or $4 million, the other no PGs we talked about at the beginning of this presentation were like the Brex card, the Ramp card, the Divvy card, the Capital on Top. Those are all no PG cards. Okay, so now let's talk about factors for credit approval. Remember, I talked about we're going to share with you how to maximize your credit card approvals for those card issuers that run a personal credit check on you and that require a personal guarantee. So the first thing is an existing banking relationship. So if you have an existing banking relationship with a bank, you're in a better position when you're applying for a business credit card with that same bank. So let's say, for example, you have a Capital One personal credit card. You had it for 5 years, and let's say you have a $5,000 credit limit. And now you want to apply for, let's say, the Spark business card. Okay? When you apply for that Spark business card, they're going to see in their system that you already have an existing relationship with them and you have great payment history, etc. So that's a factor that gets weighed in approval. Okay? So it's always great to apply with a bank card issuer that you have a previous existing relationship with and an active relationship with, not one that's been closed. Especially one you don't want to apply for with a bank that you've had a charge off with recently and try to get another card with them because you're in their system, okay? So a previous banking relationship is a plus. That's why we talk about it's great to establish multiple banking relationships. Credit scores, that's another factor they look at. So when you're applying for a business credit card, you want at least 680 or higher on 2 or more bureaus. Okay, so if you're in the 660, 650 range, don't apply for a business credit card. You want to look at maybe a prepaid business credit card, or if you have the revenues, you might want to apply for one of those corporate charge cards that we talked about earlier. So credit scores are a benchmark indicator. It doesn't mean you're going to get approved. We've seen plenty of people who have 700 credit scores get denied and not receive a projection because of other factors. So that's where your credit report comes in. And we're going to go into detail on your credit report here in a minute. But your credit report is looked at heavily when it comes to applying for a business credit card. It's not just your credit scores. Okay, so just because you think you have a 700 credit score, you're going to be able to get all these business credit cards. That's not the case. Okay, and comparable credit is really, really important when it comes to business credit card approvals and how much you're going to get. Okay, so your comparable credit, which we're going to talk about in the next couple slides here more in depth on, is if you're applying for business credit cards, how are you managing your personal credit cards? What type of personal credit cards do you have? What are the credit limits of those personal credit cards, etc.? So that's called comparable credit. It also weighs in, like if you're applying for a business loan, have you ever had an installment loan as an individual, a personal loan? That's comparable, okay? So those are things that are looked at when it comes to business credit cards, is your personal credit cards. The age of the business is another factor. Like I said, if you're a 6-month-old company, it's much better to be a two-year-old company or older than a start under 2 years, okay? So the age of the business plays a factor. So let's talk about credit scores. Many credit card issuers use credit scores that are customized for credit card lending. So most of you watching this video, you're probably familiar about FICO scores, right? And there's all these different versions. There's the FICO score 8 now. That's been around for a while. There's the 9, there's the 10T, and there's the FICO score 10. Okay? So you're probably wondering, well, what are all these FICO scores, okay? The FICO score 8, just so you know, is still mostly used right now by card issuers and major lenders, because it takes a while to start integrating these new credit score models into their underwriting systems. Like the 10T is the trending, and that particular 10T, the trends on how much debt you've used and accumulated in the past 2 years, as well as your payment history. Okay, that goes over to your trended data. Okay, so that's where that particular scoring model, like let's say you maxed out your credit card 3 months ago but paid off, they'll see that. They'll see that you maxed out this card 3 months ago. Okay, that's trended data. That's a 10T. But right now, just so you know, they're mainly using the FICO score 8. But for credit cards, when you apply for business credit cards, most card issuers are using the bank card scores, the FICO bank card scores. That's an actual credit score that's customized and designed for card issuers. Okay, and it's a totally different scoring model. You'll see the 300 to 850 FICO scores, which is we all hear about FICO scores. The bank card score will go from 250 to 900. It's a different scoring model. Now, don't freak out, because if you're like, well, what's my FICO bank card score? I have no idea what it is. Experian, when you have one of their services, they do provide you your bank card scores and let you see which ones you have. Some other credit report providers do not provide your bank card scores, but just keep in mind your FICO scores, it could be a pretty close range on what your bank card score is. But I'm going to share with you, there's even different models of bank card scores. There's a bank card score 8, the FICO score 3, the bank card score 2. So this gets pretty crazy. Usually FICO every 5 years comes out with new scoring models, but I want you to educate you, to let you know that there's different scoring models, and how can you make sure that when you apply for a credit card for your business, or even as an individual, what do they look at? They look at most likely your bank card score. So how can you maximize your bank card score? How can you make sure that you're getting the best possible approvals? So let's talk about that. These bank card scores are designed to put more emphasis on your financial behavior with credit cards. So let me say that again. Designed to put more emphasis on your financial behavior with credit cards. How you manage your credit cards, which is paying your credit cards on time. Don't ever be late. Okay, that's number one. We all hear that, right? That's nothing new. But keeping your individual and overall credit utilization low. Okay, so when you have credit cards that are in 70, 80% utilization, like you have a $10,000 card and you owe $7,000 on it, and you're keeping that balance on there, you're not paying it off, okay? That's shows that you're almost maxed out, okay? They don't like to see that. Whereas if you had a $10,000 credit card and you only owe $500 on it, your utilization is extremely low. Okay, so when you have a lot of credit but show very little debt on that, that shows that you can manage this quite easily. So that's where you want to keep that utilization ideally under 30%. You hear people say 10%, some people say 50%. Some of the highest score individuals in FICO, they've talked about this, that keep their utilization under 1%. Okay, all right. So the lower the utilization you have, the better for you. You want to have a healthy blend of credit. So you don't want to just have credit cards on your credit report. It's good to have an installment loan or an auto loan or even a mortgage. A mortgage, it shows stability in the eyes of lenders. Okay, so some of you may have a paid off mortgage. That's great. So on the credit app, when they ask if you own a home, obviously you own a home, and is there a balance on it? No, that's great too. So you're not getting penalized for paying off your home, but having a mortgage shows much more stability. So it's good to have that blend of credit. Keep your card accounts active. This is very, very important. So you don't want to close your credit cards. Even if you don't use them every so often to keep them active because they can become dormant. Okay, so keep your credit cards active. The other thing is becoming an authorized user with a bank account score may not help. Okay, and what does that mean? It's a strategy. I know that many of you, if you add an authorized user account, you inherit that credit history on your report, your score goes way up. Great. I had a 650, now I got a 730. I can get a whole bunch of credit cards, etc. It doesn't work that way on the business credit card side because underwriters know what an AU authorized user is. Okay, so yes, it'll help you reach the benchmark indicator for your credit score. But the number one thing that looks at is your primary credit cards, your personal credit cards that you have. Okay, so I'm not saying don't use authorized users. Okay, I'm saying it helps boost your score, which is great. That may help you get higher credit limits on personal credit cards. But for business credit cards, your primary credit cards are what's looked at on the personal side. So let's talk about the real key factors so you know. Is when we do reviews for business credit card funding for our clients, the first thing we look at is your primary credit cards. Of course, credit scores are number one, but then your primary credit cards are a big indicator. Not just with us, but with card issuers. They look at your primaries. How many personal credit cards do you have in your name? And what are the size of the credit limits? Okay, this is big. This is really important. Because if you have a $1,000 credit limit, a $2,000 credit limit, the highest credit limit you have on your primary is $2,500, let's say. That's the most that you've been able to manage, and that a bank card issuer has issued you is $2,500. So when you go to apply for a business credit card, what makes you think that the bank card issuer is going to give you a $20,000 business credit card when they run a personal credit check and they see that the most you've ever managed on a personal is $2,500? Okay, so that's the reality of it. Whereas let's say you had a $10,000 Capital One card, that's a primary, and you have a $20,000 Discover card, that's a primary that you've had for several years. When you apply for a business credit card and they run a personal credit check, a bank does, and they see you have a $20,000 Discover card, a $10,000 Capital One card, then your comparable credit is you're more than likely to be able to manage that type of credit limit for your business. So that's where they might issue you a $10,000 business credit card or a $20,000 business credit card, especially if your business is over 2 years old. But do you understand what I mean? That's called comparable credit. Okay, so that when you're doing this, look at your personal credit reports. Okay, what's my highest credit card limit that I have? Is it $5,000? Is it $10,000? And I'm going to share with you the strategy to increase those credit card limits. I'm going to share with you that in a minute. Okay, so your primary credit card limits are very, very important. The other thing is your bank card issuers. Who issued those cards to you? A store card is not the same as a major credit card issuer. Okay, so if you have a store-only card, let's say a Walmart card that has a $5,000 credit limit, okay, but you can only use that card at Walmart. It's not a Visa, MasterCard logo, etc. That's weighted much differently than a Capital One, let's say, credit card with a $5,000 credit limit. Much different. Okay, so who issued the card to you? You want to go with mainstream card issuers. That helps you even more, okay, than going with a non-mainstream card issuers. Okay, so your age of your card accounts. This is another very, very important thing because we have many people come to us and say, well, I just got a $5,000 card 6 months ago. That's my highest card I have. The other cards I have are $1,000 or $2,000. I've only had those for 2 years, etc. So having a $5,000 credit card, that's a great sign, but it's only 6 months old. Okay, so ideally you want those higher credit limit cards to be 2 years or older. Okay, 2 years or older. 6 months, a year and a half is very new credit. Okay, so your age of your card accounts play a big role. Okay, so you got primary credit cards. How many do you have? What are the size of their credit limits? Who issued those cards? And how old are those cards? Okay, and of course payment history. How well have you paid these cards? Have you used these cards? Okay, so these are really key factors. Do you see what's happening here? Is because these are going to play a big role in the type of credit card limit you're going to get for your business. okay? When they're using a personal credit check as a qualifier. Then your credit utilization is another big factor. How much debt do you have on your cards, okay? If you're at 50% utilization, that's okay. I'm not saying you have to pay those down or anything like that. That's why we do a free pre-qualification review for our business credit card funding program, because we do this complete review for you. We give you funding projections on what type of credit cards are available to you, business credit cards, how much you're going to be able to get approved for. And if your utilization is too high, we'll tell you where they need to be paid to before we submit your apps to the banks. Okay, so now all these key factors only apply to your active credit card accounts. Okay, so if you have a card that you had last year, $5,000 credit limit, but you closed it and it's now closed, which is a big mistake, that doesn't count anymore. We're talking about only your active credit cards. So that's why we tell people don't ever close your active credit cards. Okay, now let's talk about business credit card funding. Okay, now you want to listen to the next presentation. We're going to go even more in depth here in a minute after this. But for those of you who want to, let's say you have good credit, you want us to see how much in credit cards that we can raise for you. We get you 4 to 5 cards. Our processing time is 14 to 20 days. We don't do a hard pull on your credit because you're supplying us a copy of your personal credit report. You go to businessfundingreview.com, fill out that short form, tell us how old your business is, upload a copy of your credit report securely. It has to be in PDF format. We don't accept picture images of your report. It has to be a full report. Don't just send us a picture of your credit score. We have to see the full report. Then in 48 hours, 24 to 48 hours, we call you back and give you funding projections. If you want to move forward, then it takes us 14 to 20 days to get you the cards with the projections that we provided to you. At least 2 of the 4 to 5 cards will come with a 0% intro APR. Ultimately, it's up to the banks what they want to offer you, but our goal is to get you at least 2 at 0% intro APRs. And that intro APR period could be anywhere from 6 months to 15 months or more. Depending on the card issuer. Now, these cards only report to the business credit reporting agencies. They do not report to your personal credit. Credit limits go up to $150,000 in combined credit limits. Now, like I told you, can you get $150,000? What I just told you is you have to look at those factors. Do you have $20,000 credit cards, $30,000 personal credit cards? How long have you had them, etc.? That's going to determine the size of our projections that we're going to be able to acquire for you. Okay, so your goal is to increase those credit limits. So let me just give you an example how powerful of why using a strategy like using a personal credit check with major card issuers, how it's going to benefit you in building business credit. So let's say you go through our business credit card funding program, you end up with 4 business credit cards with $50,000 combined in credit limits. What does that mean? Well, now you have 4 trade lines reporting. That's bank issue credit of $50,000, and it's revolving, and it's reporting to your business credit reports. Most card issuers report to Experian Commercial. Some report to Dun & Bradstreet. Some report to SBFE only, which is the Small Business Financial Exchange. Okay, so it's ultimately to the bank which particular business credit bureau they report to. But that's 4 trade lines you're going to now have, and that's 4 new banking relationships. Okay, so look at it as now your business has 4 new banking relationships with 4 card issuers. Okay, and now you have revolving credit that's available whenever you need it for day-to-day expenses, for major purchases, and it's building your business credit and you're building relationships with banks. But this is where it gets exciting, and this is a strategy you can do on your personal credit cards as well. Okay, so if your credit limits on your personal side are not high enough, you want to utilize this strategy because this is the strategy we teach for our business owners who have the business credit cards. So you want to request your credit limit increases every 6 months with each of your cards, provided that, number 1, you're using the card and you're paying it off and you're using a good portion of your credit limit. Okay, that's what's going to warrant the credit limit increase. Okay, so let me break this down for you. Let's say you have a $5,000 credit card, okay? And the most you've ever charged on it was $1,000. In 6 months, if you request to increase it to $10,000, but the most you've ever used is $1,000, or if you're not even using it, that doesn't warrant them to issue you a credit limit increase, and they're going to deny the increase. Also, you want to make sure that they don't do a hard pull on your personal credit. But when you request this credit limit increase, those are the things you want to make sure that you have usage and that you use a good portion of a credit limit. Okay, so let's say, for example, you have a $5,000 card. You've used it, $3,000 charge here, a $2,500 charge here. You paid it off. And in 6 months now, you request a credit limit increase. They do a soft pull. You are more than likely to get your increase. And it may be, you know, up to $7,500. Let's go from $5,000 to $7,500 limit now, or maybe even a $10,000. Okay, so that's where you could start increasing your credit limits. And you want to do that with your personal cards, because we see many people come to us and they supply us their credit report. We do a review for them, and we see that the highest credit limit they have is $2,500. The first question we ask them is, well, how long have you had that card? Well, I've had it for 3 years. You know, have you ever requested a credit limit increase? No. And they've used it. They pay on time. They inquire and they instantly get an increase, and they can't believe it. So remember, your credit limit increase requests are very, very important. So this, going through business credit card funding, is going to increase your credit limit recommendation as well. Okay, so that helps you when you're applying for additional credit. Experian, Dun & Bradstreet, etc. In their business credit reports, they have credit limit recommendations. So when your credit limit recommendation is increased when a business or a card issuer pulls your Experian report or pulls your D&B report and they see a good sized credit limit recommendation, that's going to help you elevate and get much higher credit approvals. And this is how you can really increase your credit limit recommendation. So ultimately, when you're providing a personal credit check, providing a PG, and getting high limit business credit cards for your business that reports to business credit, do you see how it's helping you with future credit for your business? So you're leveraging your good credit. Okay, so go to businessfundingreview.com. If you want us to do a free review for you, there's no cost, there's no obligation, and we do you a full analysis there. If you don't qualify, we also give you some other recommendations. So if, like I said earlier, if you have bad personal credit, this is a solution for you as a prepaid business credit card. This is a new program by Divvy. You go to creditbuilderapply.com. That takes you right to the specific application. This is for businesses who cannot get approved for an unsecured business credit card. Okay, so you're basically loading funds onto this card. It does report to Dun & Bradstreet and Small Business Financial Exchange monthly. And what's great about this is eventually they'll offer you an unsecured line of credit, which is the 30-day float card, if you have a great history with them. So this is helping you build a relationship with a card issuer. Okay, so this is a solution for those of you who are working on your personal credit right now. Okay, so if you found this information helpful, give us a thumbs up. And if you want to know about our other step-by-step business credit building system, go to businesscreditbuilders.org. We do business credit card funding, loans, lines of credit, and we also have a step-by-step business credit building system which provides you access to vendors, suppliers, retailers, charge cards, etc., on other ways and strategies to build your business credit without using your personal credit check. Okay, so with that, make it a great day, and we'll talk to you real soon.